Hi everyone, welcome back to the audit and attestation class. So now we are starting chapter 4 of audit and attestation, which is performing further procedure and obtain evidence. So this session is the introductory section of chapter 4. Here we'll be understanding high level overview what all you can see in fourth chapter of audit and attestation exam, like sufficient appropriate evidence, general procedure to obtain sufficient appropriate evidence, specific procedure to obtain sufficient appropriate evidence, specific matter that require special audit consideration, misstatement and internal control deficiency, written representation, and the subsequent event and subsequently discovered fact. So let's dive into to have complete idea of chapter 4 for audit and attestation.
So Chapter 4 is performing further procedure and obtaining evidence. So it would be around 30 to 40% of your examination. This is the most chapter for your examination. You can easily expect around 35% on an average coming from this chapter, and it's not so big. Like in first chapter and second chapter, if you have seen, we have covered like planning section, which include acceptance and continuance of engagement letter and all those things. In second chapter, we majorly discuss on planning side, which include like risk assessment, planning for rely approach, not rely approach, involvement of specialists, management specialist, auditor specialist, or third party, right? And then we discuss on like group audit, component audit, joint audits, and all those details, right? So far we are done with all planning section. Now it's time to get into execution, right? In execution, what is the most important thing you will be looking at in any audit is the evidence, right? So evidence should be sufficient and appropriate. What is sufficient and appropriate? Any idea? When an evidence for when you are doing audit, when you are evaluating any evidence for the respective financial statement line item, when you say it is sufficient and when you say it is appropriate. Any idea? Ayush, Rahul.
Sir, when we have all the details of all the things that have happened, all the operations, that is sufficient. And appropriate is it should relate to the operations that the document should be relating, and yeah, that's what I think.
Yeah. So 1 second. Sorry. Yeah. Like audit is subject to sample testing. So we do not do like entire testing of all financial statement line item, right? So sufficiency here represents sufficiency of number of sample, right? That is more on like numeric. You can say number of samples, value of samples. So that should be sufficient to give you the sufficient coverage over the respective population, whether it's like sales, it is purchase, it is expenditure, payroll, fixed assets, right? Current assets, current liability. So is your sample number of sample are sufficient for those balances which you are testing, right? What is appropriateness? Anyone would like to add what Avneet said? Yeah, Gurmihar, Kashish, Rahul. Any idea what is appropriateness for an evidence? Just breathe.
So evidence so basically appropriately supports the sample selection. So it covers the area which has been selected for testing. It should be from the right period. It should be relevant to the testing you're performing.
Yeah, that's very true, right? The sample you are selecting, are you getting like evidence which is reliable? So that is more on like appropriateness of the evidence which you are validating for the respective financial statement line item, right? Make sense? So after that, like if you see 4.2 is the general procedure to obtain sufficient and appropriate audit evidence. So far, like if you have remember from chapter 1 and chapter 2, we high level discussed like general audit procedure, right? So like inquiry procedure, inspection procedure, observation procedure, recalculation and reperformance procedure, right? Do you remember those general audit procedures?
Yes, sir. Yes, sir. Yes.
Okay, with whom we make inquiries? $1 million question for you. With whom we make
Management.
inquiries? Management.
Management.
And anyone else? Do we make
The
inquiry with management only?
So
The
management
client
and
basically.
charge with
Those charged with governance,
governance.
yes. Whom else?
The
The accountant,
prior
client,
audit.
Accountant, employees, and whom else?
department heads,
Yep, department heads or employees, yes. What else?
External parties like legal counsels
Yeah,
and
yeah.
I don't know, so
Actuarial, legal
yeah.
counsels, specialists, right?
Do we
So,
include SOC reports in inquiries? No, right?
yeah,
I don't know.
yeah. SOC 1, SOC 2 report, right? That's also, no, that comes in general audit procedure, but in inquiry, like it's being like discussing with the other auditors, inquiring with the other auditors, right? Second is inspection. What all things we inspect? Any idea? Auditors in the gang? Yeah, Kush, Sanchit, Jaspreet, Ayush, Rahul. Any idea what all things we inspect? What is inspection procedure?
IRPR,
IRPR.
initiating recording.
That is more for like walkthrough perspective, or you can say critical path or flowchart perspective.
Okay.
But what exactly you inspect?
Is there any kind of misstatement? After
No,
testing of
when
controls,
you are doing IRPR or when you are performing walkthrough, what exactly you inspect?
testing controls, we are basically testing the controls.
The actual supports that the client provides for the controls, like for example, if the control is that someone is inspecting XYZ, for example, a reconciliation that has been prepared, so you take the reconciliation and inspect
Yeah,
that.
yeah. So for example, if you need to test purchases of inventory, so what all document you will be inspecting? So we discussed this purchase and payable process many a time.
So for purchases, we start the walkthrough so from the purchase order, and from that, from purchase order, we check the credit department, credit department, everything, and post that then shipping bill is generated. After shipping bill is generated, that it goes to the warehouse team for the shipment, and in
after that,
goods when goods are received, we received a good receivable note, and post that we do the post the entry in the trial balance and the system, post the entry once the goods are received. Yeah.
Anything else we need to do?
Yes, actually, for purchase, I think, sir, it starts from the requirement of the inventory.
Yeah,
that will be raised from the yes, and then purchasing team will issue the PO, and at the time of receipt of the goods, there will be a three-way process to reconcile. that GR invoice and
yeah, you're going in the right direction.
I just forget the remaining thing. I'm sorry.
I think we did couple of times about this purchase and payable process. I'm surprised, like you guys not remembering it. Yeah, Kush.
So so we're talking about the normal purchases process, right?
Yes.
So I think they covered it in bits and pieces. Like we start with a purchase requisition, then the purchase requisition gets converted into a PO later on, whether it's approved. Then they try to see if there is an already existing vendor, or we need to add a new vendor. Finally, all of that is done. The contract is kind of completed. They will give the order. Then the shipping team would, let's say, receive the goods. Then they'll perform a three-way match between a PO, GRN, and invoice. Then the transaction will be updated in the system, and accordingly, finally, the payment will be made.
So, what all things you inspect in this process?
So the purchase order, the shipping, the documents, the journal entries, the invoices, everything we will be inspecting.
Yeah. So inspection is of evidence which include purchase requisition, purchase order, shipping bill from the client, right? Material receipt note made by the store in charge, and then invoice received from the customer, from the vendor, and then three-way match performed by the account payable team for the approval of invoice, and then payment made by the treasury department, so payment receipt for that, and then lastly settlement of the account payable, right? So all those documents you will be inspecting, so that is called inspection procedure. Third, we have observation procedure. What is observation procedure?
Observation procedures are, sir, basically we are doing monitoring the transactions done by the employee in front of our eyes.
Yeah, that's a good example. For example, when you do IT general control testing or application control testing, so in that case of scenario, our IT team member will observe the respective transaction, how it is initiating, recording, processing, and reporting in the respective accounts and everything, right?
Yes.
What will be the other example for observation?
Sir, inventory count, physical asset verification.
Right? What do you do in inventory count? You observe the inventory count. You do not do the count, right? That's not an auditor responsibility. That's a management responsibility to perform the entire inventory count, and you will be observing and doing certain simple inspection, right? Cash count, right? Property, plant, and equipment count. Those all things comes under the observation procedure. And then,
so,
yes, please.
So inventory count, if we don't do any physical inspection or counting, so are we relying on the management's number that whatever they are giving the number, it is correct?
Good point. So first one is your responsibility to observe how they are doing count, and then you need to do sample testing.
Okay.
So you are not supposed to do 100% count. You will be doing only sample testing.
Okay.
Right. And the last one is reperformance and recalculation. Like for example, depreciation calculation, right? Payroll calculation. So these all, like there, you will be getting like big Excel sheets from the client side, and you'll be doing a recalculation or reperformance of the respective calculation, right? That is also comes under the general audit procedure. The next one is sampling techniques. Have you heard about this term before? Sampling technique? Anyone have any idea what is sampling technique? Yeah.
So there are many methods of doing sampling. There are various techniques of doing sampling. It can be like, I don't remember like what were the techniques, but there are various techniques. So auditor can use any one of them depending on the situation and
what he wants to audit, and I suppose that should be what sampling
So I
technique.
think some of the common ones is like random sampling,
Yeah, random
or let's say monetary unit sampling in US.
stratified sampling,
Exactly.
stratified sampling, and all. Yes, right.
Yeah. So here we'll be learning statistical sampling, non-statistical sampling, right? In statistical sampling, it includes like random sampling, right? And price proportionate to size sampling, right? And then we'll be understanding non-statistical sampling, which is like monetary unit sample or key item testing, right? Or on a risk-based approach when you are performing the data analytics, right? So those techniques we'll be learning, and we'll be doing certain examples for that as well in this chapter. Then after 4.3, if you see, specific procedure to obtain sufficient appropriate evidence. So after this sampling technique, we have a summary that's in your books, and I'm adding in my notes as well. So that will give you like complete, you can say, high level overview in the respective financial statement line item, what all journal audit procedure you need to perform. So like if you have to test cash and bank, what all procedure you'll be performing, like the bank reconciliation, cash count, confirmation from the banks, right? And some control testing as well. So in the book, it's very good summary has been given, and I'll be adding in my notes as well. But those things will not discussing much in class, but that will be more for your homework perspective, right? So in that we'll be having like all kind of financial statement line item, which are generally in most of the financial statement, like cash and bank, account receivable, account payable, investment, inventory, right? How to test those respective balance, what all audit procedure you need to perform to test those transactions and account balances. So it's a great summary available in the book, and I'll also add in my notes after this sampling techniques. So that will be for your homework once you are done with this, which you need to study at your own. But if you have any doubt or if you have any question, we can take care of those in class. After that, once we done with all journal audit procedure and sampling technique, so there are few things which is called specific procedure to obtain sufficient and appropriate evidence. So which include like analytical procedure, right? What are the three type of analytical procedures in audit? Do you remember?
So planning, analytical procedures, substantive, and then overall analytical procedures.
Yes, absolutely true. So in previous chapter, we discussed about planning analytical review, right? So we discuss about that. In this chapter, we will be discussing more in detail substantive analytical procedure as well as overall conclusion analytical procedure. Because in this chapter, we'll be going through all end-to-end audit, like complete execution piece of audit, right? In this new topic which has been added for your exam is audit data analytics. So data analytics is also part of the audit subject now, and it will be shortly tested in your exam because this is a new topic they have added in this year. So you can expect like good amount of question from data analytics as well. So we'll be learning more in detail about data analytics as well. Any of you have any experience working on data analytics or idea of data analytics?
Yes, sir.
Yes, sir.
Yeah, go
Actually,
ahead.
not, I just have a very basic idea, and it's about just software. So at some training time, I was working on a Tableau software. So
Tableau, yeah, that's
yes,
very nice.
data analytics.
Tableau, Power BI, Excel
Yes.
Analytics, these all are powerful tools. Now we have Microsoft Power BI tool also. That's also very good one. Yeah, Kush, you're saying something?
So, sir, I was just talking about data analytics. I mean, I have worked on it in the past. I mean, it primarily helps us in making sure. So usually when we do audit, right, we do sample testing and we do all of that. But when we do analytics, we do it on the 100% of population, right? So that kind of helps us in getting comfort on the overall data rather than just a specific piece of it. Secondly, when we do analytics, the best part is that you are able to drill down to the lowest level of information, let's say a journal entry, to identify any anomalies or any differences in your expectation versus what you see. And it kind of helps us in identifying any of the, so wherever we see anything is beyond our expectation, we can drill down and evaluate and assess to make sure that that's not a material misstatement or there's no risk.
Yeah, absolutely true. This is like data analytics is extremely powerful tool. Now it is being like most commonly used in both finance domain, accounts domain, and audit domain. So they are both management also use in MIS reporting of the data analytics, and at the same time like auditor also use, and it covers like entire population. So like sampling technique for which we were doing audit historically was having always a limitation of number of sample you have selected. Whereas here you can do more risk-based testing approach rather than like you can say random selection or journal selection. You know, like if you see nowadays in big companies, most of the big companies like accounts and finance team member, they also came up from the audit background. They have some experience working with audit firms, so they know like materiality, they understand like sample selection, they understand the things, and they try to manipulate, or like where you can say management overriding of controls around those things which they can expect like auditor may ask. So this data analytics tool is really a powerful tool to break all those you can say rules, or maybe like things which management can play around based on their understanding and expectation from the auditor. Because here you get to know that entire detail of the population, you get to know about all the abnormalities in the respective account balance, and you can easily correlate the respective account balance with the another account balance, and it can help you generating the relationship between the couple of account balance. For example, if you see like sales and receivable process, if you are analyzing, let's say, sales and receivable through data analytics, you know like how much sales you have generated, and out of that it will give you a breakdown out of the total sale, how much was the cash sales and how much was the credit sale, and how much out of those credit sale has been gone to the account receivable account, right? And then from the account receivable, how much collection you have made and how much is the pending balance. So they can make you like easy correlation between your cash sales to the credit sale, and from credit sale to the account receivable, and from account receivable to the collection, and from collection to the balance, so that you know like how things are moving. Is it moving in a right direction, or there is any abnormalities in the sales and receivable process? If there is any abnormalities you have noticed, then you can drill down, like Coach has also explained, you can drill down those reports and reach to the specific journal entry which is causing those you can say unacceptable or abnormal relations, or you can say unusual item, right? Then you can test those unusual or abnormal item rather than randomly testing so many samples. So it make audit more effective and more efficient. So this is something I assume like in your examination, you can see good amount of question coming from audit of data analytics, because this is new topic launch first time in this year, right? Then after like external confirmation, I know like we have discussed many a time, external confirmation is from lawyers, customers, bankers, lenders, right? Yes, no, are you guys with me?
Yes, sir.
Right?
Third party mainly, so.
Third party mainly, right? Independent party. So we'll be learning on those side as well on the confirmation. Then next topic is specific matter that requires special audit consideration. So in every audit, there are certain area which is considered as a special audit consideration. It may be your significant risk area, it may be your fraud risk area, and these area can also be considered in your audit report as a critical audit matter. So in the last chapter, when we'll be discussing on the audit report, so there you can correlate the critical audit matter might be coming from these 5 areas. right? So critical audit matter is basically those matter in which significant management judgment is involved, might be fraud risk is involved, or many estimations are involved, which auditor has identified as a significant risk area or fraud risk area. There in nowadays from 2000, I think 19, the PCOB has made it mandatory to disclose critical audit matter in the audit report of issuer. And if you are not disclosing critical audit matter, if you are saying there is no critical audit matter, then you need to give the reason why there is no critical audit matter. Right? So those critical audit matter, which we will be discussing in chapter 5, will be coming from this section majorly. Right? The first one is accounting estimate. What are the accounting estimates?
Provisions.
Provisions. Right? What kind of provisions?
Warranty provisions.
Warranty, doubtful debts.
Obsolete inventory. Right? Long-term employee benefits. Right? So those all comes under the accounting estimate. Why those accounting estimate is generally considered as a special audit consideration matter? Because
it involves a lot of assumptions, management assumptions.
Yes, because it involves a lot of management assumptions, and assumptions are from management, so there might be a chance of manipulation in those assumptions to mitigate their internal targets, right? So that is the reason accounting estimates are generally considered as a special audit consideration. But not all the accounting estimate you need to identify based on your risk assessment, right? So maybe like provision for doubtful debt, in some company it may be significant risk, but in some company it is a general standard practice, right? In some company, provision for long-term employee benefit might be a significant risk area, right? And then the accounting estimate would be given as a sufficient and appropriate special audit consideration. But in some case, it may not be that much volume to be material to the financial statement and might not be considered as a significant risk area. In some organization, warranty can be considered as a significant risk area, right? For example, big companies like Tata Motors, Reliance, General Motors, Tesla, or if you see in electronic companies, you can say Whirlpool, LG, Samsung, right? These companies have huge, you can say warranty provisions, right? For that, they have like huge number of customer database and huge number of sales making every year. So for that, they need to do a lot of permutation and combination to calculate the warranty provision. But maybe for a small company, let's say let's say a company who make a water treatment plant, right? So for them, they have like limited customer. They might not require to consider warranty provision as a significant risk area, right? Next one is investment in security. Investment in security, like investment can be type of subsidiary, like you are 100% subsidiary or you're more than 50% subsidiary. It can be joint venture, it can be associate, or it can be like market investment, which is like less than 20%. How you need to audit those area and what all judgments probably management has considered in those area for the investment, to identify any investment as a long-term investment, strategic investment, or a short-term investment. So there's a lot of assumptions involved in those investment area as well. To test those investment, it is considered as a special audit consideration area, right? Next is inventory and inventory held by others. What comprise inventory? What all things comes in inventory?
Raw material, work in progress, finished goods.
Raw material, work in progress, finished goods, store and spares, right? And what is inventory held by others?
So basically held by the third parties. in different
Like,
locations.
for
So
Warehouse, it
example,
can be
like Amazon.
No, Amazon might not be a right example because
Goods given on
in
approval.
goods on approval of the customer, yeah, that can be one example. Then second could be like job worker, right? Raw material has given to a job worker for some processing, right? And why Amazon is not a right answer? Because in Amazon, they do not hold any inventory. Inventory is always be held by the respective sellers. And it is just a market space where people are buying from the seller, and seller is directly, you can say, distributing to the respective customer, and they are paying commission, or they are paying certain percentage to Amazon to providing them those leads.
So, but what
Yes, sir.
if they have warehouses? The
Mhm.
hypothetical example, if Amazon has its warehouse, which he has taken on a contract with a third party, and that sellers are putting the goods in that warehouse.
Yes, I mean,
Ownership,
sir,
ownership is of whom?
Warehouse
No,
owner.
not at all.
No.
But sir,
No
in certain
warehouse,
cases,
no warehouse owner take the ownership of inventory unless and until he or she purchases.
but in certain cases in Amazon, let's say they
Like
might have a
Walmart.
distribution
Walmart
center.
might be a good example. Yeah,
Walmart.
Kush. Continue.
Yeah. No, I was just saying that, like, even for Amazon, right? If they have, like, Amazon sells its own products as well, right? So if
Yeah,
that is stored
yeah.
at a certain location, then that will be inventory
Then
held by
that,
others, right?
yes,
Because they even have
yes,
distribution centers, let's say in Europe and
yes.
different regions that distribute all of those products.
Yeah, absolutely true.
Okay.
If they have their own inventory, like now Amazon products, their own product is also coming in the respective area, right? So that is their own inventory, which is lying in the different warehouses.
So that will be inventory held by third party.
Yeah, if like warehouse owner is someone else, not Amazon, then. Like for example, you are having a warehouse and Amazon is storing his inventory at your place.
Okay.
Then
But
for
then,
Amazon, it is inventory held by third party.
but sir, like you said, like a warehouse will not take responsibility unless we purchase.
Yeah, so that is not inventory of warehouse owner. That is still inventory of Amazon.
Okay.
But it's lying with the warehouse. Yeah, anyone else? Kashish, your sense?
So can we take an example of stockist and inventory held by others?
Do you mind explaining a bit what is stockist?
Sir, like inventory is for some other company, but they will have to store the goods for that particular company. So that is one of the example of inventory held by others.
But I believe.
But the
like,
ownership is from the other company, but they will have to keep their raw materials.
Like for example,
everything.
let's say Samsung have their refrigerator and they have put those refrigerator at the place of stockist, you are saying?
Yes, sir. Yes, sir.
Right, and then stockist is managing their inventory like a warehouse.
Yes, sir.
Yeah, in that case, the inventory ownership of the inventory is with the Samsung, and their inventory is lying with the stockist. That is
stockist. Yes, sir.
Yes. In that case, yes. Right. So next one is litigation claims and assessment. What is litigation claims and assessment? What you can expect here?
So
any legal claims,
warranty claims, and consumer cases and all that.
Yeah. So it can be consumer case. It can be case from like employee. It can be union litigation matter, right? It can be case from the vendor, or maybe it can be like claims and assessment from authorities, right? Those all comes under the litigation claims and assessment. So here we need to evaluate whether we need to give the disclosure or it's not required to give disclosure, whether we need to create a provision or it's not required to create a provision. So for that, we'll be learning in detail PPR method, right? Last, anyone wants to add anything over here? Litigation, claims and assessment. Any experience you want to share? Okay, so last one is the entity's ability to continue as a going concern. What is going concern? I think we have discussed. Yeah.
Company will be operating in the foreseeable future, which is 1 year.
That is for one year.
One financial year. From which date it is considered? From the end of the financial year or on the date of signing?
On the date of signing, sir.
Absolutely true. On the date of signing, auditor need to evaluate whether the company has the ability to continue their operation for more than 12 months or not, right? If the company do not have ability to continue their operation for 12 months or more, then the entire financial statement would be valued at the realizable value. And they need to restate all the financial statement line item at a sales price or at a valuation price, revaluation price, right? Next, after that, we'll be studying misstatement and internal control deficiency. So up to 4.4, if you see, we have done planning, we have done risk assessment, we have done walkthrough, we have done test of control, we have done all group audit consideration, we have done with all joint auditor consideration, we have done with involvement of internal auditor, involvement of specialists, involvement of management specialist or auditor specialist, everything, right? And then if you see so far in chapter 4, we have validated all the audit evidence, inquiry procedure, observation procedure, inspection procedure, re-performance, recalculation, right? We have done all the sampling techniques, analytical procedure, data analytics procedure, confirmation procedure, all accounting estimates, special audit areas, investment security, litigation, claims, assessment. So we are done with all, right? So what you will be doing now after completion of all your execution? So we'll be identifying and listing down the area where you have found the misstatement, right? So once you are done with all your audit, what next you will be doing? You'll be making a list of the area where you have find misstatement and how much is the value of those misstatement, right? The misstatement is in terms of financial, or you can say deficiency in any internal control you have noticed. So here is the time to make a list of all deficiency in internal controls, which are key controls, you know, like operational control or non-key control. We should not be worried at all, right? What we should be worried at? Only the key controls which are impacting material financial statement only, right? So any deficiency we have noticed in our walkthrough process for design deficiency, when we are doing test of control, any operating deficiency, and when we are perform substantive audit procedure, which include analytical procedure and test of detail, after that we have identified certain misstatement in the value. So now it's a time to list down everything and communicate, discuss and communicate with the management. So here, after completing all your execution, you will be conducting a meeting with the management where you will be discussing like these are the area we have noticed and these are the changes which is required, maybe in the control or maybe in the financial statement, and accordingly some things management may agree or sometime management may not agree, right? So the things management will agree, management will make the correction in the financial statement, and for the control deficiency which you have noticed, management will agree to put the respective control in place from the future onward, right? They cannot go back and change the controls, right? For the numbers, they can update through the adjustment journal entry, but for the control, they will implement from the future perspective, right? Make sense? Yes.
Yes.
Right. So those all things you will be communicating to the management about all the misstatement as well as the internal control deficiency, including material deficiency or significant deficiency, right? After that, like once you are done with that, we'll be making summary of adjusted difference, summary of unadjusted difference, right? For summary of unadjusted difference are those differences which management did not agree for making the correction in the financial statement. Those said items should not be more than performance materiality. Right? Makes sense? In last class, we discussed in detail about materiality concept. 3 types of materiality. Right? What are those 3 types of materiality?
Overall materiality, performance materiality, and tolerable error.
Tolerable error, right? So what is generally performance materiality for a listed company?
With 50 to 75% of overall materiality.
Absolutely true. Absolutely. Depend on how strong the control environment is, and is there any past misstatement or mistake have been observed by the auditor or not, right? And next is the written representation. What is written representation? That is letter of representation, also called written representation. Here, after completion of all the audit and all subject, you are asking management to give us a confirmation. Give us a confirmation on the management responsibility. What are the 2 basic management responsibility? What are the 2 key management responsibilities?
The preparation of financial statement.
Preparation and fair presentation of financial statement in line with the selected financial reporting framework, right? What was the second?
Designing, implementation, and monitoring of internal controls.
Mr. Dim, design, implementation, and maintenance of internal control, right? So you'll be taking the confirmation from the management on these, like for the preparation of the presentation, design, implementation, and maintenance of internal control. And there are certain specific confirmation, which is if you have noticed any misstatement or if you have noticed any deficiency in the internal control. All those things you'll be taking a written confirmation from the management that they are aware of these misstatement and the respective action they have taken for those misstatement, right? And then any fraud risk, if you have identified any you can say suspected or actual fraud, they are aware of. Any suspected or alleged fraud, they are aware of, right? Those all type of confirmation you take in written representation. Written representation should be addressed to the auditor and is to be signed by the management of the entity, right? So don't worry, we'll go through in detail each section. So here I'm just walking you through the entire overview so that you know, like in this week and next 2 weeks, what you can expect in finishing off chapter number 4, right? Last thing is subsequent event and subsequently discovered fact. Have you heard about this terminology before? Subsequent event and subsequently discovered fact.
Yeah, so after a closure of financial statements, but before signing, there are certain like events which take place, which is I would say significant to the financial year. So these are called subsequent events. Yeah.
So yeah, very good. Like I use 2 differences. One is subsequent event. Second is subsequently discovered fact. So do you have any idea what is subsequently discovered fact?
The subsequently discovered fact would be something which was already existing in the last year, but we kind of recovered it. Like we kind of got to know about it after we were kind of done with this.
So like we discovered fraud after the reporting period.
Absolutely true. Absolutely true. So this is the major difference between subsequent event. Subsequent event are those events which happen after the balance sheet date, but before the signing date. Right? Subsequently discovered fact are those facts which were already exist, but the auditor was not aware of, which has been discovered after the balance sheet date, but before the signing date, and sometime even after the signing date. Then you need to reissue the report. You need to call back your original report. You need to issue a fresh audit report, right? Subsequent event, for example, let's say the financial year end is Jan to December, and the date of audit committee meeting, let's say, is 28th of February. So in the 1st January to 28th of February, you discovered that any litigation has come into any settlement, right? For example, there was a customer who has went to the consumer court, and consumer court has finally decided to pay him a $1 million as a compensation and loss, right? So when we were evaluating the litigation claim and assessment, based on the confirmation we received from the lawyer and the management which has given us the confirmation, is that company will win this case, and you have not provided any provision, and even you have not considering the contingent liability. But in January, the case has been heard and it has been finalized by the court that the company will be paying $1 million to the respective person. So this $1 million of the loss, the company need to book in the financial statement as a subsequent event. Make sense?
Yes, sir.
Right? Subsequent event are also of two types. One is for which like accounting entry is being required, and for one for which only disclosure is required. So we'll be learning that also in detail. Last one is subsequently discovered fact. So like we discussed in an example, so there's certain fact which you have discovered later on. Like for example, the year end is December and the audit committee date is of 28th February, right? So we are doing our final audit. Let's say from 10th January, we have started doing the final audit after the interim audit, right? When we are conducting the final audit, we came to know that labor union has filed a case against the company. But initially management has not disclosed that legal matter to us, and not from the lawyer we got any such confirmation during the interim audit procedure. But this is something new, and this may have like significant impact because it may result into strike in the plant as well, right? And it may result into major increase in the payroll expenses as well, right? So in that case of scenario, we need to evaluate the impact of it, and then we need to account for the respective journal entry, right? Make sense?
Yes, sir.
Are you guys with me?
Yes, sir. Yes.
So this is all you can expect in chapter number 4, which is performing further procedure and obtaining audit evidence.